What's up, everybody? Steve here. If you do not think that the housing market is slowing down, I came across one other article to back it up. It's a small company you might have heard of, Berkshire Hathaway. So the article goes on to say Berkshire Hathaway sees real estate income plummet. Berkshire Hathaway Home Services saw net income from real estate fall 75% year over year. Berkshire Hathaway saw income from its real estate brokerage business plummet in the first quarter of this year, thanks in part to a slowing mortgage market. Now, I did another video on my anticipation that I believe that we will see roughly 400,000 real estate agents go out of business during this next downturn. It could be more. This article goes on to say after tax net earnings from the company's brokerage business clocked in at $21 million between January and February of this year, 2022. That's down 75% compared to the same period 1 year prior when Berkshire Hathaway earned $84 million from its brokerage business. Now, obviously, a year ago, it was completely different. The real estate market, interest rates were below 3%. There was a frenzy and a lot of people were buying. And we might see in certain markets, you might be saying, in our market, there is no crash, there is no slowdown. But I can tell you, odds are it is coming. Overall, Berkshire Hathaway's net income came in at $5.46 billion for the first quarter of 2022. That was down more than $11.7 billion during the first 3 months of 2021. Overall, Berkshire Hathaway Home Services has more than 50,000 real estate agents working in, I believe this is supposed to be 1,500 offices. Home Services of America has constantly ranked among the top real estate firms in the U.S. and in March scored in fourth consecutive year atop the prestigious Real Trends 500 ranking of the largest brokerages in the country. In the company's latest report, it specifically explained the home services net income dropped primarily thanks to lower earnings from mortgage services due to decrease in funded volume and in refinancing activity. Income also declined as a result of a decrease in closed units at existing companies. Now, if you checked out some other videos, I've done other videos on this channel about the mortgage market and how many layoffs are going right now in the mortgage industry. But it's not just the mortgage industry. It is really everything related to real estate. And mark my words, I believe that trades and contractors in new construction are going to start to feel the pain as well. But we got mortgage brokers going out of business or heavy layoffs. We have title related companies that are doing mass layoffs. We have real estate agents where it's shown that a lot of their businesses, depending on where you're at in the country, have started to flatline. We have real estate agents that are telling us that they have clients that are backing out of contracts because people are just getting really scared. They're getting nervous. And also, people are running the numbers with their lenders and seeing the interest rates right now as of May 3rd. Mortgage interest rates per Mortgage Daily News is 5.55% right now. So people are rerunning numbers. They're seeing a higher payment per month. And ultimately, they're backing out of contracts. So I feel that we're going to see kind of a snowball effect for really anything related to the real estate industry is going to have an effect. And again, I believe that we're going to start seeing that in new construction as well. And here in Southwest Florida, during the last real estate recession, we had a lot of overbuilding, and I'm seeing it right now as well. There's a lot of building. There's a lot of land being blown over and a lot of builders still going vertical. But I think that we're going to see a lot of these communities just kind of go to a standstill. We will see basically them stop construction. At some point in time, it will happen when people just completely stop buying real estate because of interest rates and everything else going on, as well as high inflation and a lot of other turmoil in our economy. So if you guys are in real estate in any sense, in any manner, I would just say, be prepared for some turmoil. If you're a real estate agent, there are ways to actually do good and thrive in a down market, such as helping people with short sales, because I believe that all of that will come back unless the Fed does something crazy like reduces the Fed rate down to 0 and starts doing a considerable amount of stimulus and money printing again, which would further put us into higher inflation, maybe hyperinflation. So I don't feel that that is the card that will happen. If it does, then obviously I think all asset classes will remain high, but I don't see that that's a card that's going to pull because people are hurting right now. The cost of fuel, the cost of just feeding their families right now. A lot of people are in a tough position. So anyway, let me know your thoughts in the comments below. If you're not a subscriber, I appreciate you subscribing. And if you are a subscriber, I appreciate you guys being with me today. And I'll see you guys on the next video. Thanks.